Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, October 9th, 2006, and the market's just wrapped up. Last week I said that I thought the most important thing that happened in the market rather was that these mid-cap stocks finally broke past that 200-day moving average that's been holding them captive here. If we look at a weekly chart, we can see it's been captive since basically way back here in July when the market broke below there, and it finally closed back above that 200-day moving average. And then today, last Friday it came down a little bit on some slight profit taking, but today we had another bullish session. The only thing here is that we had light volume. Now I don't know if that was the same through all the indices, but most of the markets are getting pretty extended here. I still think that getting past this level, this July high of 140.78 is really going to be more important. You can see today we got up to 140.70, but getting that back above that level is going to put us higher, for the last 5 or 6 months. And I think that's going to add a little bit more confidence to the mid caps. But there was some nice follow through in the mid caps today, as it found support on that 200-day moving average. Now on Friday, I was saying that we had these moving averages crossing over, and that typically represents indecision. But we give the benefit of the doubts to the buyers as these longer-term moving averages remain higher. And I still think that's the case right now. I think the more important level of support for this market is about 138.5. That's about where we have the 5-day moving average, and also where we have that 200-day moving average as well. So that's going to be an important level. And as far as resistance goes, getting above 141 would be a great thing, I think, for the mid caps. But it was encouraging to see that after a weak opening today, the buyers did show back up again and were able to create a higher high in these mid caps. So market acts good, and as I said Friday or this weekend, the market is extended, but that makes money management and stock selection more important. And that's what we're going to continue to focus on. The NASDAQ 100, looking at a 10-minute time frame here as well, I had said, same thing. Basically, we were having what looked like sideways action because of these moving averages crossing back and forth. The market broke past that little level of resistance, though, and pulled and rallied. And you can see where it rallied up to as soon as I put my pivot lines on here, but it got right up to the daily S2, and that line might be a little hard to see because it's yellow, so I'm just going to trace over it. But this is daily S2 right up here, and the market came right up to that level. It's important to keep an eye on those levels just to kind of see. A lot of times they bring about selling as far as S2 is resist, R2 rather, will bring about selling a lot of times, and S2 will bring about buying a lot of times. So I don't think they're a trading strategy, not at least for me, but a lot of people do tend to look at them. So like a lot of technical analysis tends to be a self-fulfilling prophecy. Beautiful uptrend in this NASDAQ. Anyone who's bearish I don't know what the heck they're looking at. You can look at all your oscillators and indicators, but price is the only thing that pays us, and price continues to march forward. We've taken out this weekly important level on the NASDAQ 100, and, sure, it's extended, but, the path of least resistance is higher. Price is what pays us. We're getting a little bit of consolidation, maybe, but the buyers remain in control. I think right now breaking below this level here, probably about 41.20 or so, and we're probably going to see that 5-day moving average catch up to that as well tomorrow. We might see a little bit of pullback from that area towards that area, I'm thinking. The S&P 500, we didn't see a higher high in there today, and this market continues to just consolidate here in a tight range. It's also extended, but it's in a great uptrend, and so far every one of these little consolidations has led to higher highs. So, maybe we're, at the same area as right here where we break down for a couple days. Tough to say, but, we've got this little consolidation level at extended levels, so it'll be important to see. In particular, I think what the semiconductors can do here, and we've been keeping an eye on this pattern that's continues to develop, which looks like in a symmetrical triangle in here. We can see we got to the top of that range today. It wasn't able to break out, but breaking past that level, I think really breaking above about 34.70 or so, and we'll take a look at a shorter term time frame in a moment. We'll put that 200-day moving average into play as far as hopefully breaking out past that level And you can see that, you know, this market's been below that 200-day moving average since May of this year. So breaking above that, I think, would be pretty good message sent to the bears that, hey, buyers are back. You better hurry up and cover your positions before you lose all your money. This is that symmetrical triangle on the hourly time frame when we're looking at it a little bit more clearly here. And you can see that we've got this little resistance level, which happens to coincide now with the top trend line from this symmetrical triangle. So breaking past there is not only going to take out this level of resistance, but also that trend line. So we're going to have to keep a pretty close eye on about 34.60, 34.65. Getting above and holding above there, I think, could send this market pretty quickly higher. And if we just take the height of this 33 up to about 35, we could maybe take 20 cents off. We'll call it $1.80. Add that to the breakout point. We'd have $1.80 added to 34.60. That'd be what would that be? I guess that'd be about 36.40 or so. My math might have been off there, but if it was 36.40, that looks about the height of this pattern in here. Then, that would really send a strong message to the market that the buyers are back in control. And like I suggested last week, it looks like Google might provide the leadership for this market. And Google, has now convincingly broken past this symmetrical triangle on the longer time frame that we'd been looking at. And we saw that, the triangle had been forming and acting, holding a little bit of resistance at that upper level. It broke past there. Now it looks like it's probably headed for 500 or higher on shares of Google, and that could be a good catalyst for buying in the for the overall rest of the market as well.